A lot has changed in just 5 weeks. The plant in the background, my haircut's on the opposite side, but what hasn't changed is this bullish signal which we've been talking about for months on end. This was the breakout that set Bitcoin alight to go towards 31,000. We are not yet done by the looks of what the smart money is showing us. So in today's video, let's have a look at what's going on with BTC, what's just occurred in the stock markets, the biggest markets in the world, the NASDAQ and the S&P overnight as we close out the last month, and a huge mega signal on the VIX, which we have not seen since prior to 2020, the pre-pandemic levels that were achieved in these markets. Guys, let's start by smashing up that like button. Subscribe to the channel if you haven't already. Top of the video description is our TIA Premium, where you can learn more about trading and investing in the long-term cycles. From ourselves, I've been in the market for over 17 years across cryptos, the stock markets, trading futures, CFDs, and of course in real estate as well, the biggest market in the entire world. So this is going up. There is a discount on TIA Premium full of hours and hours of educational content to help you set up for the upcoming bull markets. All right, guys, enough of me shilling about the fantastic education there. Bitcoin, we are on the way again to around $30,000. This pullback that we have seen on Bitcoin during the middle of April really didn't amount to too much. I personally was expecting a little further, maybe a test of 26.5 into this zone here. But what that potentially means moving forward is that we may get a test on that later after we see further upside. We still need to break past these higher levels. The month is ending soon. The week is ending soon for April. Remember, the spot markets do trade 24/7. So that's going to come out on Monday morning or Sunday evening, depending on where you are in the world. So that's going to give us a better reading on what's going on at the moment for BTC. But what we can confirm is that the US markets have started closing at some of the highest levels that they have seen since this first dump in April of 2022. The NASDAQ has closed its month, so we're looking at the macro chart here, at the highest level since that period. So that's over 12 months now, coming up towards the resistance level here at 50%. For the S&P 500, this has also closed at its highest level since April of 2022, so since 12 months, above its 50% level here at 41.55. Now, of course, there's still a lot of bearish news and uncertainty and volatility and unprecedented events that are occurring in the markets. But what the smart money is doing in the market right now is buying the dips, and they are buying these dips faster and faster. Now, eventually this is going to lead to something to the downside. We'll have to get a correction, but for now, it's best to be on the side of the trend, and the trend is up. The missed opportunity, as we've pointed out, is underneath 3,800 for the S&P 500. You can see what's just gone on through March. This was the banking collapse, and basically there was a lot of volume buying up these levels. We're on the S&P this time, not on the futures market. You can see the volume here is the highest volume since 2020. So that was since that pandemic low. So that's some pretty big volume buying it up on a higher and higher dip, meaning they're coming into the market at higher prices, buying up quicker and pushing these prices higher. Meanwhile, the noise, the news that is out there is telling us the opposite. It's telling us that the market should be collapsing based on many different events that are going on out there. But we're sticking to the facts in the charts, and this is exactly what is going on right now. So what else is going on? Well, banks are obviously collapsing left, right. That's what's going on. That's the news headlines. So what we've just witnessed, though, is the highest daily close in 2023 for the S&P 500. The highest weekly close in 2023 for the S&P 500, the highest daily close for the NASDAQ in 2023, the highest weekly close for the NASDAQ, and we've also seen the highest monthly close for the S&P 500 as well, above its 50% level, which is a very key resistance level, especially when it's on a macro chart, especially when it's from the bear market downtrend. This particular range right here, if we take it off log, you can see the magnitude of the downtrend, the October low, as we talked about. And from that time, we were anticipating a potential significant low in March based on historic cycles. In particular, we go back to our 20-year cycle, which is this period right here. All of that data is out on the channel, which you can go back and check out on these videos. So with the S&P, that was the low there, October, then into March, and then this is what has happened from that point. So it's not a straight up move to these highs, nor does the top have to be anything overly significant. Maybe we don't blow off to 5,000 or 6,000 or 8,000 points, but we methodically move our way up into 2025, 2026, 2027 before we get to a peak. Maybe we do go a little bit higher, a test, and then a failure before we fall under and form a bear market. Any of those options are open, but for now, earlier on in this move, this is what we are seeing, something very similar to what is happening in 2002, 2003. The NASDAQ is also moving in a very similar fashion. Now, these moves to the upside for the stock market and Bitcoin are probably going to be helped by the weakening US dollar. But in the short term, as we've pointed out, we potentially see this market coming up to around 103, maybe testing this upper resistance level here at around 105. But it's been a very weak close in April, being one of the lowest closes since March of 2022. So all of these months here closed up higher than where we currently sit. And yes, it's coming off the back of a lot of negative news around many countries not using the US dollar anymore. So there's a bit of turmoil there. But of course, when the news is the worst, it's typically the bottom or a local bottom is near. And that's potentially what we've seen here because the price is basically stagnated at around 101. So maybe this is time for a little bit of a pull to the upside. Nonetheless, over the longer term, probably still some more downside there. So we'll keep up to date with this on the channel. Make sure you have liked and subscribed so you are getting up to date with the macro cycle analysis. So just in the last 24 hours, I posted this on Twitter looking at the resistance level for the SP 500. So this has now happened quicker than I had anticipated, which is what's leading me to think that these lows are just coming in a little bit too fast and the excitement to the upside is a little bit too fast for something that could be sustained longer term. And so this typically all leads to a bit of a blow off, and we'll see that in a moment just with the fear and greed index, the market sentiment, and that typically leads us into a bit of a reversal for maybe an extended period. So this has now happened. I thought this would take a little bit longer, but basically this is what we're seeing right now. The S&P E-mini futures, so the most highly traded futures market in the world, just closed at its highest daily level in 2023, as I pointed out here on Twitter. So this is now showing stronger signs to the upside. This is really starting to get a little bit overheated, but it is also giving us pretty strong longer-term bullish signals on the VIX. So this is the lowest level monthly close for the VIX that it has seen since December 2019, so before the pandemic crash. So this is the VIX, meaning that you're going to see tops on the VIX when the S&P 500 is coming to a bottom, and then you'll see tops on the S&P when the VIX is bottoming. But you can go through some pretty extended periods during the through this 17 to 11 level where you get this bull market, and it seems like this is now basically on the cards to what's happening with the S&P. So layering all these different indicators in together is really showing a lot of strength to the S&P early on, which is what we've been talking about here on the channel since the October low. We haven't swayed from the opinion that maybe this was just a run up in a bear market, it was a rally, and then we're going to get a collapse. We have not swayed from that at all since that October low. Even we could go back to June as well. Yes, this market did go a little bit lower in October, but overall, this is a very key trading range that is setting up for a new bull market to the upside. And it seems like we're going to get some of these breaks relatively soon if this market keeps at this pace. So throwing a few lines on the chart right now, we can see to the upside, 4,200 points is the key level to get above for the S&P 500. This is at that rejection trap going back nearly 12 months now. You can see that there's been many tops, and it is looking like it is trying to close above to get above that level again. To the downside, banking crisis low. I think we've all got that under our noses now. This is basically a distant memory, and which is why I typically say that any levels under the 3,800 point for the S&P is a missed opportunity for these hedge fund managers, money managers, retail, anyone that sort of missed out on this very extreme bearish time in the market, because now the market is pretty well just looking at that as a distant memory. To the downside, 4,000 is still our level, and then also this 4,060. So we're holding out relatively well. Let's wait for the confirmation above 4,200. As I said, I still remain cautiously confident that we'll eventually get there, but how we get there in the short term is pretty much anyone's guess. Another metric that keeps popping up time and time again is stocks in correction. So covering things like the breadth of the market, how many stocks are nearing all-time highs or 52-week highs or nearing their 52-week lows. And so we have SP 500 stocks in correction. When this is near its highs, it's typically at the stock market lows. Like you can see here through the GFC, so the global financial crisis, the market was bottoming and this was starting to roll over. This shows the percentage of S&P stocks in a correction. It is typically a sign of selling exhaustion and bullish for prices going forward. So we're seeing this in an extended period above these levels where the stocks are in correction. So this is like a lot of stocks in correction. This is few stocks in correction. And we haven't been at these levels for this long in this little period, but we've been at sustained high levels for quite a considerable amount of time. Last time this happened was during the GFC, and prior to that was during the tech wreck bottom. So this is another reason why it's possible that we're starting to roll over. We're putting in lower highs, lower lows, and this market eventually starts to roll over, and there are less stocks in corrections, which means there are going to be more stocks going to the upside. So if there are more stocks going to the upside, that's obviously going to lead the fear and greed index to greed and potentially extreme greed. But the problem with this is that if we don't get enough time in the neutral zone, so around this sort of 50 level or lower, then we run the risk of remaining at the highs for too long, too much greed comes into the market, and eventually we have to roll over. But that rolling over in the market sentiment could still happen at higher prices. So what could happen is the market run up and then roll over to higher prices. And at the rate the market is going at the moment, that is a very high possibility that we take out the resistance levels, the market gets into a higher greed reading or an extreme greed, and then we start to roll over, put in some consolidation above the previous resistance levels, which now becomes support, and surprise, surprise, your TA lesson 101 is complete. Resistance flipping to support. And so that's what leads the market to higher and higher ground, while the fear and greed is able to maintain a healthy balance on the way up. Now, during this entire period of the market moving to the upside, you're still going to have lots of negative news, especially people from big corporations like Morgan Stanley. Mike Wilson is a very key example of how a mega bear can remain a mega bear during a market going up. And essentially what I like to call this is how smart money goes from smart money to dumb money. But at the end of the day, they're trading other people's money. So it's other people's money going from the wealthy to the less wealthy, who now become more wealthy, because these guys just have absolutely no idea that the market is going up, or they do have an idea and they're basically trying to manipulate the market. That would seem more likely. It's typically what goes on, so we don't need to get up in arms about it. It's just what goes on in the market, and listening to any of this sort of jargon is just going to set you up for failure. Moving on to the market sentiment, we can see that the equity money market ratio here is also coming down. When this comes down, it usually leads into a low, but some people are reading this as this has to come back down to the previous levels. That is entirely incorrect. You can see the pandemic low here never made it anywhere back to the GFC low or the tech wreck low, and that's absolutely fine. What we've seen is the October low on the stock market, which is obviously reading here is September because this is end of a month when the reading here. You can see that low came in, and then we had another low come in for March, which is at a higher low on the price. So the money market assets here, the equity / money market asset ratio, is starting to move higher. Yes, there are still lower highs here, but it seems like it's getting squeezed, and eventually this money is going to find its way back into the market like it does during the bull markets. And typically that is what has happened every single bull market. The thing to note here is that over the long period of time, the lows are getting higher, the highs are getting higher. So I think it's incorrect to read these sorts of this sort of data as that it has to go back to the lows. It may, but it doesn't have to go back to those lows. As for Bitcoin, well, it looks like it's getting overheated just like the rest of the market. So this is probably going to end in a little bit of tears for the people who are getting on late. To the upside, we've got a resistance level at around 32,000. To be exact, 31,848. That is the next key 50% level going from the April top down to the November low. So this was that key period of the market where it just continued to get flushed out. Basically, it was the complacency bounce before all of the capitulation took place. Now we're on our way back up to test that 50% level, which is also the tops that came in at the redistribution zone just before the CFI collapses. Your Celsius, Voyager, BlockFi, everything else. That was all that collapsed through into June, into that June low of 17,500. So it looks like we're on the verge of coming up to test that level around 32. Now, to the upside, should we get through that level, we take our 50%, go to the all-time high, which is at about $69,000. So that brings us out at a 50% level at 42,200, right smack bang in the middle of the complacency bounce, that move up into the Bitcoin Miami conference just before the next major collapse of Luna UST, and of course, like I just mentioned, the CFI. It was also the bottom of the market in December 2021, basically that first big collapse from the all-time high in November. And that small one, a little bit of a nothing burger, and then a big collapse into December. So it's going to be a key time to see how Bitcoin reacts, or if we do actually get to 42,000. This is going to put a lot of pressure on the bears to eventually flip, which could leave a big squeeze into the market, and then you get that market sentiment where it basically rolls over. So this is where we currently sit for the crypto fear and greed measure. We've started to climb back up. We're at 64 now, potentially slightly higher today, but nonetheless, the pattern remains the same. These lows are also getting higher, and eventually this has to roll over. So like we talked about for the SP 500, we can still reset the market sentiment, but it's a good thing for the bears if we can get, the bulls, if we can get higher before we reset. The higher we go, then we have further cushioning to the downside, which means we can collapse further. Say we get up to the mid 30s, then we come down and test 20% to the downside would be about 29,000. And then if we did get anywhere back to these levels at 25, that gives us a nice cushioning of a 30% retracement, yet where we can remain macro bullish, but we can be short-term bearish. Eventually, this is going to have to end. So we can see with the crypto fear and greed index, we'll continue to follow up on the channel. But yeah, we had that first rejection at around 70. So somewhere in this 60 to 80 is what we've been talking about here on the channel, as it has shown in the past a pretty good area for the market sentiment to top out. And seeing as we are putting in higher and higher lows since June of 2022, eventually these higher lows are going to get broken. So this is going to be that really bad, difficult time for any of the bears or people who are sitting on the sidelines waiting for this next breakout to say that, oh, look, they feel safe to get into Bitcoin. Then we see that market roll over. Potentially something quite volatile like what happened in 2019 when we went on that big run. In the meantime, Bitcoin still has a lot of work to do from this point, so we'll continue to follow up, looking at the closes for crypto on Monday, so don't go anywhere. Like and subscribe to the channel, and like I mentioned, top of the video description, the discount for our TIA premium before the price increases. And if you want to get trading on Bitget or ByBit, there's up to $230 free, no trading required. Just use those links down below to get trading. Basically, the levels to the upside, 31,000, which is that top, 32,000, which is the 50% level. So we've got to get above those, put in some higher lows, and then maybe we start to push higher. Nonetheless, it's going to show up here on the fear and greed index. If we get higher than this point, probably going to break 70, which could then set us up to a further downside on the market sentiment. So the feeling of people out there in terms of how safe they feel in crypto and Bitcoin, which is going to be good for the bulls because we could get a higher low forming while resetting the market sentiment. That's a good thing for us if we're bullish. All right, guys, have a great weekend. I'll see you back here soon. I did say I'll get a real estate video out to you because there's a lot going on there as well. It's the end of the month. And I also need to do a sell in May, go away video because that is a particularly hot topic. People are starting to question that. Should they be selling now before May? Let's look at the data next week. Thanks once again. Have a great weekend, and I'll see you back here on Monday. Peace out.